Beautiful morning to you. This is Ron Janish. Today is the 16th of November. The time is roughly, well, 9:30 in California, but that means that in New York, the market has been open for 3 hours. Here's the ES right now. That's the E-mini, which is kind of like SPY in a futures form. And as you can see here, this was the high. And at this high, you have a certain pattern in place that we talked about in our Christmas bonus video. Yes, we sent it out ahead of time because I got so many requests for it. So, and the Christmas bonus video goes to anyone at all who got the course this year or even 2 years ago or 5 years ago that we have on our mailing lists, and we sent it out. So what this video talks about is about what to look for a nice reversal like happened up here. And it also talks about when that's going to occur. Okay. And then it's going to talk about, what to look for in terms of how far the move will go. And then we also cover how much time it will take. So here, for example, we have a standard, what I call a Tom pattern, and we have a nice down move. And in theory, this would probably go a bit more. There's a certain time window that this type of a move generates, and right now it looks like it's going to continue possibly till the end of the day, maybe till tomorrow, okay, before there's some kind of counter move. So that's what we're looking for right now in the stock market. Let's move on to the hogs. Oink, oink, the hogs. Why did I put this median line in there? Let's take a look. There we go. One of the things that happens is sometimes, let me just draw this the other way. Sometimes prices don't make it to the median line. Like here, prices obviously didn't make it to the median line. Okay. And what you're going to find is that very often when this happens, they'll be stopped at the parallel. Isn't that kind of cool? So that gives you a clue as to where prices might reverse when they don't make it to the median line. So let's take a look at a little more in depth in this one here. This one here says 47875. Well, where is that? 47875. That'll be about here. Okay, so you can, if you want to, you can wait until there's a nice reversal at the line and then take it, whatever you think is appropriate. It's your money, your choice. Now let's take a look at something else. Let's take a look at, what is this? Bean oil, bean oil, bean oil. Now bean oil, now both hogs and bean oil look like they're going to be in this downtrend for a bit. So here's your 1 hour chart on bean oil. Let's take a look at this on daily. This is beautiful. See, one of the things we cover in the expanded courses, we talk about patterns like this one here, which is really a second, how can I put it, a second time something occurs. So if you look at this pattern here, just up to this much data here, you say, yeah, certain thing is true, and then you go over here and you say, yeah, well, it's true again. Okay, and when it's true again, very shortly thereafter, that's usually one heck of a move. So we're looking for this to have one heck of a nice little move here. And let's take a look at where this entry was made on the hourly. 344, 34.44. Would have been about here. Okay. Now, if you notice when I bring up the charts, there's another one here, and that's cattle. And I don't bring that up because, well, I was in there this morning and boom, we had a small loss in that and got out. And it's important that you do that, so you don't take a ton and a half of risk. Let's take a look at something else. Got some questions from lots of people regarding Forex. Is Andrews applicable for Forex? Absolutely. What we did was we computerized it just for grins, for a partnership we're in for some lovely people down in Brazil. And when you computerize stuff, here's the secret. Uh, what your historical studies do are really great, and you can come out with some really super duper historical studies. Okay, and that's using perfect 2020 hindsight. But the trick is how well does it do after you've made the software? So this was a product that we delivered to our friends from Brazil back in, I think it was May or June of last year. And, as you can see, this is what happened since then. And it's been going reasonably well. And once in a while, there's one or two losses in a row. And then things get green again. And so here we can see what has happened since this was developed and hasn't been messed with, right? So that's kind of neat. So this is Forex, and this is a nice example of using the course methods with Forex pairs. Now, if you're looking at these numbers here, gee, it only made so and so much money. Well, hold on a sec, guys. What this software, what we told this software to do is use no leverage. Remember, in Forex, you can use incredible leverage. Said use no leverage and use 1/3 of the total equity available in the total equity in the theoretical account for each trade. So it doesn't necessarily use a lot of money to trade, but then again, there's a benefit to that. So even though the historical study here says it made about 19% per year, the other thing that's really important is downdraw is very low. And so you want to keep that nice and low and comfortable. Okay, something that you can live with. All right. So this is Ron Janisch with andrewscourse.com. If you haven't taken the course, please do go to andrewscourse.com. If you'd like to be in our free email group, go to babsontrading.com or andrewscourse.com, and it'll say something there about join the free Precision Trader trading group. That's what it is. Cost you nothing. And there's no catches. You just get a few emails a week from us, usually, and also questions that people might have that and comments that are relevant to this stuff here. Okay. So I thank you for your time and see you next time.